Welcome back, everyone. Today we're having a wee look at Johnson & Johnson, a massive pharmaceutical company that's currently going through a lot of lawsuits on their baby powder at the moment, and as a result, they're actually down nearly 5% in the last month. So a few things a bit rocky coming towards J&J in the future. That's their ticker symbol, JNJ, and they're traded on the New York Stock Exchange. $427 billion market cap and a share price of $163, down nearly 6% over the last year and nearly 5% in the last few days. Now, first place to check up on them, of course, is their website. Let's have a look at what they do. You know they're pharmaceuticals, but I want to learn a wee bit more, just a bit of a glimpse. You can obviously dive as deep as you want, and I always recommend any company, always understand what you're investing into. So they operate in 4 sectors: the consumer health, medical devices, pharmaceuticals, and vision. So a pretty broad range there. When it comes to the consumer health, I'm actually going to show you some of the products because I know plenty of you will recognize them. So Clean and Clear, used it myself. There's Neutrogena, the hair care. They've got this Pisbune. Well, plenty of you know it as sunblock that we obviously all buy when we go on holiday. Not that that's been too many holidays with COVID and all propping up. But we'll go over to self-care products that is available in the UK. This is their UK website. They do have a lot of brands also in the US, so recommend you jump between the two. But Benadryl, we have Benylin, Calpol, big staple for everyone. Everyone in the UK is very familiar with Calpol. Imodium, Nicorette, and Sudafed. So big, hard-hitting, massive market share products that is seen across the UK. And then Carefree, Johnson's Baby, and of course Listerine. They also had their baby powder, but as you know, with all the ongoing lawsuits of cancer-related things to the product, the problem with that is the lawsuits are into the billions, and Johnson were trying to use bankruptcy as a kind of way to stop the amount that they have to pay out. Now, I think a court's blocked that. Lots of news on them, certainly. Now, let's jump back over, because there are 3 other important sections of the MedTech, which covers orthopedics, specialities, and general surgery. When it comes to their pharmaceuticals, they do quite a lot: vaccines, ornithology, immunology, neuroscience, and then cardiovascular metabolism. So big on the pharmaceutical sides. You almost need a background when you're diving into exactly what they do in that area. Then they also have vision as well. Vision here is covered by their vision care and their surgical vision. Okay, let's jump on over back to Simply Wall Street, the website that I use to do a lot of my analytics. I use it for the videos simply because it is really aesthetically pleasing, and plus it puts a lot of information. 20 years ago we wouldn't have had something like this. The amount of files that you would have to look through to even have anything similar to this. So highly recommend it. All links are in the description for all these websites. But yeah, they score 6 out of 6 on the snowflake here. It just analyzes the company based on value of the stock, their future outlook, past performance, dividend, and health. Now, they score 6 out of 6 on health. We'll have a look at that later. And 5 out of 6 on dividend. It's a very reliable one. Not the highest at 2.7%, although I think it's closer to 3 now as the share price has went down. So, other good points, trading at 15% below their fair value, forecasted to grow 4.7% over the next few years. Right. So, now that we've got all that, you can see some of their competitors. We've got Pfizer, Eli Lilly, and a few others. Plenty of news over the last year, but plenty of it is legal issues. As you can see here, the court rejecting their talcum powder cancer lawsuit. They were trying to use bankruptcy to shed more than 38,000 lawsuits filed by women who developed ovarian cancer due to these products. So, of course, that brings into a bit of a moral question over one of their products. But again, we just look at the investing side of things here. So, let's say shareholder returns, minus 12% for the US market, whilst the actual pharmaceutical market grew over the last year, 3.2%. They're considered a relatively low volatility stock compared to the industry as a whole. That's something to bear in mind. They have 141,700 employees. CEO Jacqueline Duato, founded in 1886. You can have a wee pause here if you want a read of all of this information here. And let's go on down. Fundamental summary, just a bit of the basics on their financials. 23.8 times on their PE ratio. That's their price to earnings ratio. And price to sales ratio is 4.5. Okay. Right. Earnings and revenue, $94.94 billion. The lawsuits are also in the billions. And their gross profit, $64.5 billion versus other expenses, $46.6. So they have a net profit margin of 18.9% and a gross margin of 67.9%. But you get that quite a bit in the pharmaceutical side. The next earnings date, a very important date, is April 18th, 2023. They actually had one recently there on January 1st, start of the year. Debt to equity ratio is 42.9%. We'll be looking at that later. Current yield, 2.8. And payout ratio, 66. Well, we have a wee bit on their ex-dividend date. It's February the 17th of 2023. So you'd need to buy within the next 15 days because you need the share on the 16th of February in order to be entitled. Don't buy a share on the ex-dividend date. You need it the day before in order to be counted. So always bear that in mind. It can be a little off-putting. So, you need it before this date, so it should make a bit more sense there. It's paid in March the 7th. Valuation will drop down, goes over PE again, but you can change these metrics up if you want to see price to earnings, price to book, and other metrics. Then it throws in their peers. Now, we've seen some of their peers there, Eli Lilly, and Pfizer is obviously trading a lot lower than that. But again, if you want, you can edit the peers and edit, if you want to compare them to other companies within the industry or not even within the industry, whoever you want to compare them to, it's always good to see. And then versus the industry as a whole, this tends to throw in a lot of companies that are extremely similar to the likes of Johnson & Johnson. But considering the four massive segments that they cover in the pharmaceuticals and just medical industry in general, they definitely are a massive, massive player in the space. A fair PE ratio is 27.7, so they are actually trading a wee bit lower than that. When it comes to their share price versus fair value here, this is based on their future cash flows, and it's a discounted cash flow model. So looking at it here, they're 14.9% undervalued. Now, this is actually a little different to their intrinsic value that we're going to look at in Alpha Spread later. So wait till you see that. Sometimes these two models agree. Sometimes they don't. In this case, they do not. Analysts' targets are they're relatively high, about a 10% increase in the next year, and they're in good agreement of it. Again, a lot of these lawsuits and the legal throws a bit of a spanner into that prediction. When it comes to future growth, they only scored 2 out of 6 here, so let's see what they did well in. A nearly 5% forecasted annual earnings growth. We can see here if we throw in free cash flow, they have quite a bit of free cash flow, an awful lot. So again, when that comes into paying dividends, lots of free cash flow, $17 billion. That's a pretty good cover. So let's see down to past performance next. 2 out of 6, 24% in the last couple of years. You can see that between 2017 and 2018, things weren't that great. On their earnings side, I'm sure there was a good reason for that. Operating expenses have increased year on year, and over COVID they didn't do too bad either, but they maintained their healthy 17 to 20% profit margin throughout the years here as well. Okay, so let us go down to their financial health. They scored 6 out of 6 here, so that's really good. We can see short-term liabilities, $65 billion to $45 billion. Long-term, $109 billion to $54 billion in long-term liability, so pretty good cover there. The short-term covering both short and long-term liabilities. Now, their debt to equity ratio, we're going to throw in, so the blue line's equity, red line is debt here. If we throw in cash and equivalents, they have more cash and equivalents than they do debt. Great. Fantastic to see. More cash than total debt. Their debt's also well covered by cash flow, and they earn more in interest than they pay, so interest payments not a concern. That is some balance sheet. We'll see an Alpha Spread later on, a different composition of it. Dividend, they score 5 out of 6. Notable, not high, but it's stable, growing. Earnings, coverage, and cash flow coverage as well. You can see the little turquoise line is their dividend per share, and it has been growing year on year for at least the last decade. Good to see. Dividend yield has been dropping as their share price has been increasing. That is projected to continue growing in the next 10 years. Okay, so industry averages are a little higher, and it is forecast to actually grow their dividend in the next 3 years. Earnings payout 66%, cash payout 67%, so good ratios, nothing major jumping out of me there. Management 3.3 years average tenure. The CEO's actually only been for the last year, so he entered just in the middle of COVID. What a good time to start. That is definitely some time. You can read into him. It gives a pretty decent write-up on anyone that is part of the business. Be sure to have a pause if you want to read more of it. Let's go down here and see the leadership team, 3.3 years average tenure, and the board members, a lot higher, 6.3 years, all considered quite experienced if it's over 3 on average. So, ownership, recent insider transactions, BlackRock, buy, sell. Okay, so a lot of movement for BlackRock. We can see here ownership breakdown, 70% institutions, 30% general public. We can see here that Vanguard, BlackRock, and State Street own a combined nearly 20% of the company alone. And then obviously goes into lots of other asset management firms, legal and general, even making a wee appearance here. Okay, let's jump over to the next section, which of course is, we have Google Finance here. Simply type in NYSE-JNJ or even Johnson & Johnson's stock price. Sometimes I'll bring you up maybe a UK equivalent if they're trading, under a certain thing in the UK stock exchange. I always recommend you just type in NYSE or US stock and it'll bring you up this exact page. From here, you can get all the news, especially related to their bankruptcy talcum powder case. Information on the company from the likes of Wikipedia, their company page. Then it brings up a little bit more accurately their competitors. You can compare them directly and see their financials. Gives you a glimpse here of quite a lot of the fundamentals you've seen over in Simply Wall Street. We can extend the chart by 5 years or max it out, and it's just a different way to look at the stock. So be sure to have a wee look. When I was born, the stock was worth $35. That's some increase. All right, let's go over to our next stop, which is alpha spread here. Intrinsic value, which is based on the discounted cash flow model you've seen earlier, added with relative value and averaged out, and it's actually a 12% over evaluation, 13%. I can't read. I must get my glasses. Best case, I always click on that. Well, 21% under, but that's on a best case, so it does change the intrinsic value a little bit. Worst case, it's 27%, so it's given it about $142, currently trading at $164. It has, of course, been at $142 in the last couple of years, so not out of the realm of possibility. Now, alpha spread here is similar to Simply Wall Street, gives you just a different layout. You can see fundamental analysis, financials, and a different way to see the balance sheet composition. There's also plenty of other metrics that you can look at. And it also goes to Wall Street price targets, and then, of course, competitive landscape. It is free to use. You can use up to 3 companies per week to have we dive into. Links are all in the description. Let's move on. Next up, Dividend Max, our free website that I love using, certainly. It gives you mainly a summary on their dividend. That's what it specializes in. So it gives you status of the dividend, has it been paid, declared, what type is it, so it's quarterly, paid every 3 months, what it is per share, declaration date, ex-dividend date, pay date. And you can also play about, if you were thinking of buying, say, 10 shares, you could calculate, well, how much am I getting? And if you're from the UK, remember, there's a 15% tax on any dividend paid from a US company if you're resident in the UK. Always remember that. Annual dividend chart, whoa, that is smooth as. So for the last 15 years been growing. I definitely think they're an aristocrat. If I'm not mistaken, they're one of the, they've been paying an increasing dividend in nearly 6% for the last decade. Well, beyond that. So great to see. And you can also get some company information here as well. And last but not least, we have Trading 212, the platform that I use for all my videos and portfolios. Simply typing in J&J, you can find Johnson & Johnson. And from here, you can set price alerts, add it to a watch list. You get some company details. And nice charts, cash flow, balance sheets, whatnot from here as well. And advanced charts so you want to play about with some of the metrics. But yes, my thoughts on Johnson & Johnson. Well, the legal troubles are, they don't look to be ending anytime soon. And the fact that they were going to go the route of the bankruptcy thing to get rid of the law. Like, there is a lot going on about this company. Not to say, in a way, you could look at on the way of, if this continues, they may come down in share price. The share price may come down further, and maybe it might be a good bargain buy at some stage. Also, being at $164, possibility of maybe a stock split in the future as well, because I know when a lot of the companies get to, into the $100+ per share, that's also a possibility. Just throwing it out there. It doesn't really affect anything, stock splits, but we can see their lowest point was actually $120, and that was COVID, March 16th, 2020, when a lot of share prices just went down the tube. But yeah, it's definitely in its own right. It's almost like it's a diversified healthcare products company and pharmaceuticals, so it's a giant in its own right, massive cash flow. It is a potential for certain portfolios. I can see that for sure. But yeah, let me know your thoughts on Johnson & Johnson in the comments section. Always love reading them, and other people like seeing them. I know there's plenty of people that lurk the comment section to see everyone's thoughts and opinions, and heck, we all learn a lot off each other, so let me know, and I'll see you all in the next one. Hey you.